Okay. So it's now tax season. The federal government has created all its forms for this year. And so we're going to be talking about your responsibilities for filing tax returns. So what we'll be talking about today is basically an overview of taxes, tax topics in the United States. So we're going to be looking at the different kinds of tax types, income versus payroll taxes. We're going to look at tax residency status, residents versus non-residents. We're going to look at tax treaties, taxation processes. So basically a very broad overview of the factors that are going to affect how you have to file your taxes for the tax year 2023. Okay, so why should you pay your taxes? Well, there are two basic reasons, because as non-immigrants in the United States, you are required to comply with federal immigration laws. And that includes the responsibility of filing a tax return if that is something that is required for your situation. And if you don't file tax returns, that could have negative repercussions for any future immigration benefits, particularly if any of you may have longer term plans for remaining in the US, such as permanent residency. They will look at your tax return history, so you would want to comply with it for that reason alone. But also, it is, of course, required that you comply with state and federal tax laws, and failure to comply with these laws could result in penalties and additional fines assessed. So just a couple reasons to comply with the tax filing requirement. So we're just going to jump into it right away and talk about income tax versus payroll tax. So these are the two types of taxes that you're going to actually see on any payment receipts that you get from an employer. They're going to show how much income tax they're withholding from your paycheck and how much payroll tax. So what are these two kinds of taxes? Income tax, of course, is just that. It's tax based on the income you are earning for the work that you are doing here. And in our system, we have a graduated tax rate. So the more you make, the higher your tax rate will be. But it's graded. So basically, if you look at this chart on the screen here, you'll see that for the first $11,600 that a person makes, an individual makes, the federal government is only going to tax them for 12% of that income. But of course, most of us are going to be making a lot more than 11,600. So if you happen to be making, let's just hit a nice round figure, such as $50,000. If that's your gross income for the year, our federal government is going to tax the first $11,600 at a 12% rate. Then the next 35,000 approximately, they're going to tax at the 22% rate. And then for that last $2,850 that you're making above $47,150, they're going to tax at the 24% rate. So that's why it's called graduated. The more you make, the higher that income is going to be taxed at. Now, payroll tax is a completely different kind of tax. This is basically our Social Security network here in our country. It provides that Social Security for people who retire, kind of like a pension, after they retire at their retirement age of 67 or 68, or depending on when you were born. And there's also a Medicare component as well, which provides the health care for our retirees or people who might have disabilities and qualify. And basically, those persons who are paying FICA will be paying 7.65% of their pay each month for FICA. And then your employer, UCSD, if you are employed by UCSD, will also match that contribution. They also must pay that 7.65% to the federal government for each employee that they hire. And so that those funds then are going to be available to you if you remain in this country and retire here. So that's the difference between income tax and FICA tax. Income tax and FICA tax are both taxed by the federal government. So our federal government is going to tax you on your income, and they're also going to tax you on those federal social programs, Social Security and Medicare. But our state government will also tax you. They have an income tax in addition to the federal government, and they also have a sales tax. So on anything you purchase, you're going to be paying an additional tax per purchase, with certain necessities excluded, like food. And then, of course, local counties, municipalities may also tag on a little extra sales tax. So if you're shopping here versus shopping in Los Angeles, there might be a slight differentiation between the sales tax that you pay, and that's because of the municipality in which you might be purchasing that object. So for your tax filing responsibilities, you may be required to file federal tax forms, and you may also be required to file state tax forms. Okay, next we're going to talk about tax residency status. We'll kind of leave that previous slide on hold, whether you have to file state or federal tax. We'll get back to that. But first, we're going to talk about tax residency status from the federal perspective. So our federal government divides persons into two categories: non-resident aliens for tax purposes, NRAs, I will call them, or resident aliens for tax purposes, RAs, okay? Non-residents or residents. And it's very important to understand which group you fall under, because that has implications, a lot of different implications. And so I'm just going to go down the list here. If you are an NRA, then you are only taxed on your US source income by the federal government. So if you have, say you're a visiting scholar here and you have your income coming from your home country employer, that's not US source income. So the federal government's not going to tax you on it if you are a non-resident alien. Certain non-immigrant statuses do not pay FICA taxes, what we just went over. So if you're an F1 and J1 status and you are an NRA, then you are exempt from paying that FICA tax. However, if you are a non-resident alien, you are excluded from taking most of the tax benefits that US citizens and residents for tax purposes are eligible for. Finally, the form that you complete is going to be different from the form that a resident alien completes. So non-NRAs will complete the form 8843 and the form 1040NR generally. Now let's compare that list with resident aliens. So RAs are taxed on their worldwide income. So if you're a resident alien and you have some income from your home country employer, that is going to be taxed by our federal government. Also, you will pay FICA taxes. There is an exception for students who are enrolled in the institution for which they are also working. But generally, once you're a resident alien, you will be paying FICA taxes. And then you are eligible for all of the tax benefits that a US citizen is eligible for. And then you would complete a different form, the form 1040. So these are the major distinctions between being an NRA and the RA, and their implications for how you proceed with your tax obligations. So let's look at how one determines your tax residency status for federal purposes. So there are two basic tests. The green card test is the easy one. If you have a green card, you're a resident. The more interesting and complicated test is the substantial presence test. So in this test, you basically look back at your amount of presence in the United States in the tax year and the years directly before that tax year. So when we're talking about the tax year, so I'm going to step aside here and just give you a little more context here. We are now in calendar year 2024, but we are going to be meeting our tax obligations for tax year 2023. So we're looking back at the prior year, January 1st through December 31st of 2023. And that is a tax year that we are concerned about. So for purposes of substantial presence test, we have to count how many days we were present in that tax year. So if you're looking back at your own situation, you identify, were you present for at least 31 days in 2023? If so, then you've met one of the requirements. And the second requirement would be, do you have 183 days of presence during the 3-year period, the immediately past or the immediate tax year of 2023, and then 2022, and then 2021. But there's more to this formula. For 2023, you count the full days of presence, but in 2022, you only count 1/3 of the days, and in 2021, you count only 1/6 of the days. So kind of a bizarre formula. But for those of you who are in F1 status or J1 status or J status or F status, basically, you can exclude days of presence for purposes of the substantial presence test. And what this means is for F students and J students, you are identified as exempt individuals for up to 5 years of presence. And this is a lifetime total. So basically, if you came over for an undergraduate degree in 2018, and then you stayed for graduate degrees, basically 2018, 2019, 2020, 2021, 2022, all of those 5 years through 2022, you would exclude your days of presence for the purposes of the substantial presence test. You wouldn't have to start counting until 2023, because that's your 6th year. You no longer get to exclude days of presence. So then you actually count the number of days that you are here in 2023. And if you meet these 2 requirements, where you're here at least 31 days, and then the second bullet point, at least 183 days, you wouldn't count 2022 and 2021 because you get to exclude those days of presence because you were an exempt individual in those years, but you aren't exempt anymore in 2023. So if you hit 183 days, then you actually would become a resident alien in 2023. So that's for F and J students, and that's a lifetime maximum. So if you were here many, many years ago as, say, maybe a high school exchange student in F or J student, J status, that would actually count as one of your years. And the what a year means is basically if you have any presence during a calendar year. So for anyone who may have come over in December of 2023, well, even if it was December 15th, those 16 days of presence in December count as one of your years, one of those 5 years if you're a student. Similar for our J scholars. Any days present in a calendar year equates to a full year. But our scholars have a different situation. They don't get 5 years of being exempt individuals. They actually only get 2 years over a 6-year look back period. So for scholars, it's much more confusing and complicated because particularly if you have past history in the United States, because you basically look back only the past 6 years. And so you can actually, if you're here long enough, you can actually flip-flop from non-resident to resident alien. And then after you've been a resident alien for a few years and not an exempt individual for those few years, and you stay here, then you could actually flip back to a non-resident alien again. It can get very confusing. So that's an overview of tax residency status. We're going to look now at a few scenarios just to practice this. So first example, J1 postdoc scholar employed by UCSD and arrived December 14th of 2022 and still working here, and they've never visited the US before in F or J status. So are they an NRA or RA for 2023? Well, thinking back to the exempt individuals, J1 scholars have that 2 years, 2 of the past 6 years, they can claim being exempt individuals and exclude days of presence. So this person arrived in 2022. They had about 17 days, but that doesn't matter. That's a full year. So 2022, they're exempt. They don't have to count days of presence. In 2023, they're exempt as well. That's their 2 years. They don't have to count any days of presence. So that person would be considered a non-resident alien for tax year 2023. Now, when we're looking ahead a year from now in 2025 and considering our tax year 2024 for the same individual, well, they arrived in 2022, that's 1 year. They were here all of 2023, that's 2 years. Then in 2024, they have to start counting their days of presence. And if they are here for 31 days and then 183 days, then they will become a resident alien for tax purposes. 183 days is approximately July 1st. So if they were to leave the country by June 1st, then they would never trigger the substantial presence test because they wouldn't have quite hit 183 days. So they'd be out and they would still have been considered non-resident aliens. But if they stay past that, then they become a resident alien and would be filing a 1040 for tax year 2024 on all of their worldwide income. Okay, let's look at the next example, an F1 first-year PhD student who attended an undergraduate program in New York starting in September of 2019 and then transferred to UCSD for their PhD program. They had no prior F or J history. So are they NRA or RA for 2023? So let's get the fingers out and count. 2019 is 1 year, 2020 is 2, 2021 is 3, 2022 is 4, 2023 is 5. So they get to exclude all days of presence for up to 5 years because they're the F or J student. And that's exempt individuals in the student categories exclude days of presence for 5 years. So for 2023, they're still excluding days of presence, and they are a non-resident alien. They file a form 1040 NR and an 8843. For 2024, again, 2023 is their 5th year. So 2024, they're no longer an exempt individual and they have to start counting days of presence. So they would do that if they meet 183 days, then they are a resident alien. And in calendar year 2025, they would file their 1040 for tax year 2024. Okay, F1 OPT is similar. I'm going to skip that and just jump to the H1B employee. So H1Bs, this one situation arrived September 1st, 2023. Now, H1Bs are not considered exempt individuals, so they start counting days presence from the very start. So this particular individual, if they arrived in September, so I'm going to count months: September, October, November, December. That's 4 months. There are approximately 30 days in a month. That's only 120 days approximately. They did not meet the 183-day requirement for 2023. So they will file as a non-resident alien for 2023, even though they are not an exempt individual. So a couple key takeaways. I want to stress that an exempt individual, if you ever hear that, does not mean exempt from paying taxes. It means exempt from counting days for purposes of a substantial presence test. So don't get confused that, oh, I'm an exempt individual, I don't have to pay taxes or file taxes. That's not the case. And also just the reminder, once you become a resident alien, then you are going to be subject to the FICA taxes. And that status, so when you hit that 183rd day of presence in the country, that's when your status changes, but it's retroactive to the first of the year, January 1st. So for all of you who might be approaching that transition to resident alien, just beware that your paychecks are suddenly going to have that extra FICA tax withheld. So if you had questions about that, that might be a reason why your paycheck is suddenly different in January or February, rather. Well, early part of the year. Okay, on to the next slide. So that's residency status and exempt individuals, not necessarily exempt from paying taxes, but some of you do have benefits from tax treaties that could exempt you from paying taxes. So there are a number of countries that have tax treaties with the US, and those tax treaties provide certain benefits. Right here, I have an example of the tax treaty with China. And you can see the table of articles. So these articles basically point out what benefits exist for individuals who meet the requirements of the particular tax treaty. And generally, in most of the tax treaties for most of the countries, it's usually around Article 19 and 20, where they talk about the benefits for teachers, professors, and researchers, as well as the benefits for students and trainees. Basically, if you're curious about your country and whether there's a tax treaty, you can look at the list of IRS tax treaties here. This is hyperlinked. And to determine the exact benefit, you have to identify which article applies to you. And generally, it's going to be the student or the teacher, professor, researcher article. But how do you know which one? So basically, the article is determined by your immigration status. So if you're an F1 student, then you are going to be qualifying for the student article. If you are a researcher, the J1 in the research scholar category, professor category, or short-term scholar category, you're going to qualify under the teacher, researcher, professor categories. So there are a couple instances that could be confusing for folks. Say we have an F1 student who's just gotten a position as a tenure-track professor. Well, if they're still on F1 OPT, even though they're being employed as a professor, that immigration status is F1. That's a student category. You're only eligible for the student article benefit. Somewhat similar is our visiting graduate student appointment title. We call them visiting graduate students, but you are here on a research scholar category. So even though you are a student in your home country school and you're called a student here, your immigration category, J1 research scholar or short-term scholar, is falling under the teacher, professor, and researcher articles. So it's important to understand how you classify your immigration status in terms of the relationship with the article of the treaty. Okay, now we're going to look a little more closely at some of the tax treaty benefits. So I've got a couple screenshots. These are from publication 4011, an IRS publication. IRS stands for Internal Revenue Service. It's our federal tax agency. And these are real handy charts. This one on the left shows all of the treaties that exist with benefits for studying and training. So this is for our students who are maybe employed on campus or employed as a graduate student researcher or teaching assistant. So we're going to look at China and kind of look at this brief overview of what the treaty provides. So there's no limit to the amount of years that you as a student, if you're qualified for the China tax treaty, can take those benefits. So you can come over as an undergraduate, and 8 years later, if you're still in your PhD program, you can still be reaping the benefits of the tax treaty. What is the actual benefit amount? Well, here it shows that it's $5,000. So that's per year. So if you're eligible for the China tax treaty benefits as a student, the first $5,000 that you make from employment, you're not going to be taxed on at all by the federal government. Once you hit over 5,000, then the federal government is going to start taxing you. And then it just refers to the treaty article because you would need this when filling out your tax return. Okay, now let's look at for the teachers, professors, and researchers, for our scholars here. This is the chart for those countries, and we can see that, you know, unlike the students where there tends to be a maximum limit of 5 years, for most scholars, it's a 2-year limit. China has an exception there. We have 3 years for China. And unlike the students where they do cap the earnings, the scholars generally are not capped at all, no limit. So it doesn't matter how much you make, all of it is exempt from income tax if you qualify for the treaty. And then they show the treaty article here. Now, one very important thing for some folks to keep in mind is that some of these treaties have a retroactive clause. I've highlighted them in the yellow. What this means is that if you stay a day past the maximum year in the US, then you lose your treaty benefits retroactively to when you entered. So for those folks from these countries that are highlighted, if you are, well, basically, if you stay more than 2 years, you're not going to get any benefit of the tax treaty. So it's really important to, as best you can, understand how long you're going to be in the United States, because that's going to have huge repercussions on your tax filing. If you have if there is the chance that you will stay more than 2 years, then you probably should not take any of the treaty benefits, because if you do and stay longer than 2 years, then you would be required under tax law to pay back all of the taxes that you did not pay those prior 2 years. Conversely, if you don't take the tax treaty benefit and you end up leaving the US before that 2-year mark, you do have the option of filing an amended return and requesting all of that, all of your treaty benefits and all of that tax refunded to you. So it's pretty hard. I know many of you come and you're not sure how long you're going to stay here. So it is a very challenging thing. But it's important to keep that in mind if you're from these countries, that you may have this challenge to meet depending on how long you ultimately stay. Okay. How are taxes paid? Let's see. Basically, we pay as we go. So every paycheck we get, your employer should be withholding appropriate amount of tax, income tax, as well as the FICA tax. And of course, if you have a tax treaty benefit, then they're not going to be withholding because they're allowing you to take that benefit. How does employer know how much to withhold from your paycheck? Well, basically, you do this by you inform your employer by completing the form W-4, which is a federal form, and it basically tells the employer how much you want to have withheld from your paycheck to meet your annual tax filing obligations. And there are formulas that you can use to figure out what that might be. But this really applies to resident aliens for tax purposes, because resident aliens, if you remember back several slides, are eligible to take a lot of tax credits, but non-resident aliens are not eligible for those same tax credits. Tax credits mean things like personal allowances. For instance, a resident alien, a US citizen or a resident alien, can get certain tax benefits if they have a spouse and 3 children that they're supporting, and if they're paying a mortgage, they can get a benefit for that. So there are all these benefits that resident aliens may be eligible for. And because of that, they're going to ask their employer to hold back less from their paycheck. Non-resident aliens are not eligible for those tax treaty or for those tax benefits. And ultimately, IRS indicates how you, as a non-resident alien, must complete your Form W-4. There's a hyperlink to IRS Notice 1392 here, which basically tells you how to complete that form. And we, as an employer, have to withhold a certain amount if you're a non-resident alien. That's just a tax requirement. So you don't have really, as a non-resident alien, you don't really have options for how you fill this out. But as a resident alien, you do have options to have less withheld from your paycheck. But of course, if you have a tax treaty benefit, then we as an employer will allow you to apply that benefit. And then finally, come April 15th, that's when all of our tax returns are due. So basically, we've been going along all year, tax year 2023, getting income withheld from our paycheck, every paycheck. And so by April of the next year, we add up all the income that was withheld from our paycheck. We add up all the income we made, period, identify how much was withheld, and then identify what our tax obligation actually is based on the amount of income that we made for that entire year. And then we determine what is the discrepancy between how much we paid and how much we actually owe. And if you've paid more than what you actually owe, then you get a refund. If you've paid less than what you actually owe, then you have to pay more taxes. And again, that what you owe, your tax liability, is based, if you remember one of the very earliest slides, on the tax rate, right? The first 11,000 is you're taxed on at 12%, and the next 35,000 at 22%. So that's how the federal government identifies your overall tax liability. And then you identify how much you've paid already through your employer's withholding, and then figure it out. So how does this all kind of take place? When you are onboarded, for those of you who are employees at UC San Diego, when you are onboarded, our payroll will request that you complete a GLACIER record. And GLACIER is the software that our employer uses to identify your tax residency status. So in other words, it's going to calculate the substantial presence test for you. So you don't have to do it if you've got a GLACIER record. GLACIER does it for you, and that's really nice. And then based on that tax residency, it's also going to look to see if you have any tax treaty benefits. And if so, it's going to ask you to complete some forms, and you need to complete those forms in order for our payroll to apply those treaty benefits to your situation. And then you're going to upload immigration documents showing your status, and then basically our payroll is going to review the documentation you provide, and the information in the GLACIER record that you provide. And then the software itself determines your tax residency status and the treaty benefits that you're eligible for. And you would get a printout of that. And here's an example of a printout of a GLACIER record. This is a few years ago, so it's a little bit historical. But I can see here for this individual, when this record was created, they were a non-resident alien for tax purposes. And they were going to meet the substantial presence test as of July 3rd of 2023, and they were going to change to resident alien. So that was the 183rd day after of counting, after excluding days of presence for prior years as an exempt individual. And then their tax residency status start date is retroactive to January 1st. So midway through the year, they flipped the switch, they hit 183 days, they became a resident alien, and it's retroactive to January 1st. So they have to be paying FICA taxes through January 1st. And then this shows the complication of the scholar side for exempt individuals. They would then switch back to non-resident alien. If they're still here in January of 2025, they're going to switch back to non-resident alien. It tells me that this person has a tax treaty. They're going to be exempt, and they have 3 years from their date of arrival. So their tax treaty period is going to run from 2022 to 2025. Those 3 years are going to be eligible for treaty benefits and unlimited dollar amount, etc. So that's basically how you read your GLACIER record when you make the GLACIER record and get the printout. Now we're going to go over some of the forms. So we're going to start with the W-4, and I already kind of referenced this a couple slides ago. This is when you tell your employer what allowances you want. But again, if you're non-resident aliens, you don't really have a choice. You fill out as single or married filing separately. And these are the actual instructions. This just tells you, check the single or married filing separately. You don't get a choice, married filing jointly or anything like that. You just have to do it the way they suggest. And then there's a similar form on the California state side, the form DE4. And California does require that you use the same filing status as the federal form. So if you are single or married filing separately in the federal form, then you have to do the same filing status on the state form, married filing separately. And of course, both forms, if you're resident aliens and can really choose your situation, they provide worksheets that help you work through what potential personal allowances you might be eligible for that can reduce your withholding from your employer's part. Okay, the W-2 form is the form that our employer sends to you all, and they upload it through UCPath, and you can download it from UCPath. And this is kind of the yearly reconciliation that the employer provides. So you can see in this example, they give you the total year's wages, tips, and other compensation in box 1 right here. And then they identify how much federal income tax was withheld in box 2. And then they also do the same for Social Security, but that doesn't really play a factor because the FICA taxation doesn't impact how you file your income tax return. And then down at the bottom, they show you how much state income tax was withheld. So this is how you identify. You would get a W-2 from each employer that employed you in the year. So some of you, if you had 2 employers, you'd have 2 W-2s, each with this different income. But this is how you identify what your total earnings from the employer was through the year and the total tax withheld. And the employer also will send this information to the IRS. So the IRS has the same information that you have. So that's another reason to file your taxes, because the IRS has this information. So they'll be expecting a tax return from you all if you have a W-2. And here's the 1042-S. So this is an additional form that not everyone, but some persons will get. It's basically reporting income that is exempt from withholding due to a tax treaty benefit or fellowship payments to non-resident aliens. And it is possible to get multiple 1042-S's because the employer has to identify the type of payment that's being made. So they have to code this income. So if you're getting two types of income, such as fellowship income, and maybe you also have a TA-ship, then that's payroll income. That's coded two different ways, so you would probably get two 1042-S forms. But again, not everyone would get it. If you don't have a tax treaty and you're not getting a fellowship, then you're probably not going to get a 1042-S. In this particular example, we can see there how the employer has coded the income, which is 19, which doesn't really tell us much. Down here, it says teaching. For teaching, that does not make sense to me because we see a net income of $5,000. They're from China. The China tax treaty for a student has a maximum amount of $5,000. So that sounds right. But code 19 is usually for scholars and not for students. So I think whoever filled this out, this example, didn't quite get it right. But anyway, this kind of tells you the amount of income then that is being exempt from withholding due to the treaty benefit. Okay. So this is just a quick chart to kind of show you what forms you need to fill out. So if you're an NRA, you fill out the form 8843. If you had no U.S. source funding, if you have U.S. source funding, you fill it out as well as the Form 1040-NR. So basically, if you're a non-resident alien, you have to fill out the Form 8843. Doesn't matter, you have to. It's just a requirement. It's a simple one-page form, very easy to complete. If you have U.S. source funding, then you also need to fill out the Form 1040-NR. If you're a resident alien for tax purposes and you have U.S. source funding, you have to fill out the Form 1040, very different from the 1040-NR. And if you don't have U.S. source funding, then that's a little more complicated. You may or may not have to fill out the Form 1040. These are just hyperlinks where you can actually get the forms. But what I want to show you is the resources available to help you complete your tax return filing obligations. So for non-resident aliens, our institution purchases a license to GLACIER Tax Prep. So this is a software application that helps you complete your 1040-NR and your Form 8843. So if you're a non-resident alien and you're affiliated with UC San Diego, if you have a GLACIER record, you would have already received an email on Monday letting you know that you can now access GTP and complete your tax returns. If you don't have a GLACIER record, but you're affiliated with UC San Diego, you can request an access code, and you would do so by emailing internationaltaxhelp@ucsd.edu. It's going to be later on in the presentation, you'll see it. But that's what you would email, and then we'll send you an access code and instructions on accessing GTP to complete your tax return. So remember, I was talking about a GLACIER record, and then this is GLACIER Tax Prep. The GLACIER record is what the GLACIER system, we as an employer, use to determine your withholding. GLACIER Tax Prep is created by the same company, thus the name GLACIER, but it's a completely different software. It's for you personally to complete your individual tax returns. So it's helpful to distinguish between GLACIER and GLACIER tax prep, because if you don't make that distinction, it might be hard if you're having a conversation with an administrator on campus to understand what it is you're wanting, because they're two completely different systems. So GLACIER tax prep, you get your access code, it's free of charge. And basically, if you have a GLACIER record, it's going to move all that data from GLACIER and pre-populate the GTP forms, the 1040, the form 8843, I'm sorry, the 1040 NR and the form 8843. So it's really nice. If you don't have a GLACIER record, that's okay. You just have to key in the information directly into the system. You won't have any information pre-populating. But do know that once you complete it in the online system, you still need to print out the document, sign it, and then physically mail the document to the IRS. And it will give you the instructions and the address, etc., to mail it to. But you have to print it out, sign it, and mail it physically to the IRS. Now, if you're a resident alien, you're not eligible to use GLACIER tax prep because that's only for NRAs. RAs have some other resources. If your adjusted gross income, that's your overall income the entire year, is below $73,000, then if you access the IRS website, file free, then you can actually use electronic software free of charge. If your adjusted gross income is below $60,000, you can also avail yourself of volunteer income tax assistance. So the IRS has numerous free programs where people help you complete your tax returns. They're called VITA programs. But of course, your adjusted gross income has to be below this limit. And then, of course, there are numerous tax accounting firms that you can go to. H&R Block, private certified public accountants are all examples. But I want to stress that if you are still eligible to claim tax treaty benefits, the electronic software is basically not going to help you. They're not going to understand how to claim treaty benefits as a resident alien. And you would want to make sure that if you use a certified public accountant, that they understand how to apply tax treaty benefits to your situation. And you can actually see right here on this hyperlink, page 47 of this IRS publication, it gives you examples of how to complete your tax return as a resident alien when you're claiming a tax treaty benefit. Okay, now we're going to jump quickly to California and understand the differences between the California obligations for tax filing and the federal. So for the California system, so California has a different law on taxes, right? We're a state, they have state laws regarding taxes. Their California Franchise Tax Board is the agency that oversees taxation in California. They have a different definition of residency, where the federal definition of residency was purely quantitative, where you actually count days of presence. In the California state, it's much more qualitative. So they look at all these very subjective variables, the amount of time you spend in California, where your family lives, where your principal residence is, do you have a vehicle, is it registered in California, where are your bank accounts? And so you kind of look at the preponderance of this evidence and determine if someone is a resident or non-resident. There are additional couple factors. If you're a student, there is case law that allows you to, regardless of how long you're here, if you're enrolled in a degree program, then you can be considered a non-resident. For others, generally, California Franchise Tax Board looks at 9 months of presence as becoming a resident. But again, it's very subjective. And at the end of the program, I'll show you the slide where we have our tax resources. And we do have 2 upcoming workshops, a federal workshop and a state workshop. And we have individuals from the Franchise Tax Board come and they'll talk about residency status, and you can see kind of how subjective it is and what things they're looking for in determining residency. Two other really, really important distinctions between federal and state tax law are also identified here. Sourcing income. California sources income based on where the work is done, not where the payment is coming from. So where US sources income, the federal government, if you have your employer in your home country paying you while you're doing work here, US, if you're a non-resident alien, our federal government does not consider that US source income. California does. Okay, so if you have income coming from outside of California, but you're working in California, California will tax that income, even if the federal government does not. Additionally, California is a state, not a federal government. They don't have any treaties with your home country. So California does not recognize any tax treaties. So all of the scholars who are eligible for tax treaty benefits and are completely exempt from paying taxes to the federal government, you will need to pay taxes to the state government because they don't recognize the tax treaties. So these are two really, really important distinctions to understand between the state tax filing and the federal tax filing. Similarly to the federal government, we have income brackets in the state of California. You can kind of see the percentage rate. It's a graduated tax bracket here. And unlike the federal government, where you have any US source income, you have to file a 1040 NR as a non-resident. For California, they have an income threshold. So basically, if you are under 65 with no dependents, then if your total worldwide income is $21,000, well, I think under $21,000 and $21,561, then you do not need to file a California tax return. If your income is this amount or over, then you would need to file a California tax return. Okay, and then for filing the state returns, you would file either of these forms, a 540 NR or the 540. And then I'll just say that the state tax return, the state tax workshop, they'll go over non-resident filing, a part-year resident filing, which is very helpful to see how they do it. And I should point out that GTP resource, that is only for federal tax returns. That does not file your state tax returns. This is just a quick overview of the schedule. So we're in February here. We'll have an upcoming workshop, I think next week or 2 weeks from now, on how to just complete the 8843 if you have no US source income and you're a non-resident alien. That's a simple one-page form to do. We've just issued the 1042Ss, I think, on last Friday. And we've opened up GTP. And then next month are our state and federal tax workshops. And then following April 15th is when your tax returns are due, both state and federal tax returns. Okay, these are the resources. Here's the tax page, our website with a lot of this information. And then there are additional websites, payroll, very good FAQs here from payroll. If you have questions, you can email internationaltaxhelp@ucsd.edu, and we will try to point you to appropriate resources to answer your questions. This is how you would contact the GLACIER administrator if you have questions about your GLACIER record, glacier@ucsd.edu. And then if you're in GTP and have questions about GTP, they have an online help. So make sure that you're making the most of the online help function in GTP when you're actually in there completing your tax return. We do have a discount code on our website up here at the top that is for Sprint Tax, which is a state filing solution. So you can use the discount. It's just a few bucks off the cost of a state tax filing through Sprint Tax. And these, of course, are the workshops. Okay, that is pretty much it for the presentation. So let's open it up for I'm sorry, I see there are a lot of chat questions. So I'm going to go ahead into the chat now. I can actually look at the chat, and I will try to answer these questions. Sorry, I missed the chat. I can't look at the chat and present at the same time. Let's see. So someone with questions about downloading W-2 from UCPath and faced a login error when IT told them only UCSD employees can access UCPath. However, I'm a grad student. Well, if you're an employee, if you're a grad student who's employed, then you should be able to access UCPath. So you should reach out directly to UCPath. If you're not employed, then you may not have a record in UCPath. See, next question, J1 Scholar. When I'm filling out the GLACIER record, I selected the exempt option without understanding its implications. I was not aware that if I decided to stay in the US for more than the years I was exempt, I would have to pay back taxes. This year, if I choose to not be exempt and pay the taxes, will I also have to pay the taxes from last year? I'm confused about this. If you're talking about exempt because of treaty benefits, and you're from a country where the treaty benefit has a retroactive clause and you stay past 2 years, you will be responsible for paying the tax for that first year. You may want to wait to pay it until you actually see if you are going to stay longer than 2 years, at which point you could file a 1040X, which is a amended return for that tax year if it was 2022. So you might want to just wait until you know exactly what your plans are for staying past 2 years or not. Next question. A J1 scholar married to a J2 dependent must file separately from the dependent, correct? Does a tax treaty exemption carry over to J2s? Also, dependents need to independently do the presence test to establish their RA. Okay, so this is basically J1 and a J2 dependent. J2 dependents also do the substantial presence test, and most likely it's going to be the same as their J1 principal, unless they, I can't really see a way that they wouldn't be the same resident alien or non-resident alien as their J1 principal. However, J2s are subject to FICA tax. So if they're employees, doesn't matter whether they're resident aliens or not, they will be paying FICA tax. Also, J2s do not get any tax treaty benefits because that is specifically for the principal, not for any dependents. Okay, next question. Do we have to mail Form 8843? Yes, there is no online option. Okay, is Glacier Tax Prep just like TurboTax, but for UCSD employees? It's only like TurboTax in the fact that it's a web-based software that's gonna have the logic to like take you through the information that it needs. It's going to ask you questions, and based on your answers, it's going to give you more questions so that it gets an overall picture of what you need. So in that way, it's like TurboTax, but it's not TurboTax because TurboTax is only for resident aliens. If you file for TurboTax and you're a non-resident alien, likely IRS is going to come and ask you to file an amended return because you filed incorrectly. which forms should J2 dependents fill out if they are not employed? So if they're not employed and you're a non-resident alien for federal tax purposes, and you're using GTP, the GTP is going to actually spit out Form 8843 for both you and all of your J2 dependents. Okay, so it will probably ask you, do you have any J2 dependents? And you'll say yes, and then it'll ask you their names, etc. And then it will spit out Form 8842, 8843. And yes, all J2s and F2s, all, whether adults or children, they all have to have these forms submitted, and you just include it with the F1 or J1 principals form. Okay, I'm a visiting graduate student with a J1 visa living here for less than 6 months. My income is only my scholarship from my home country. I got the mail from bank about a gift they gave me. Due to this gift, do I need to fill out Form 1040 NR too, or only the 8843? I think this might be pertaining to bank accounts. So a lot of banks will entice you to become a customer. If you deposit $3,000, they'll give you a $100 gift. It's actually considered interest income. If you're a J1 or an F1 non-resident alien for federal tax purposes, interest income is through typical savings accounts, savings banks is not taxable. So this kind of gift would not be taxable. Okay, I became an RA in the middle of 2023. Should I file both NRA and RA forms? If you become a resident alien in the middle of 2023, that's when your status flips, but it's actually retroactive to January 1st. So you're actually a resident alien as of January 1st. So you would file only the 1040 form. Okay, next question. I was in Texas for my summer internship, but I didn't pay any state tax there. Do I still have to file any form there? There are about 8 states that don't have income tax. And I think Texas may be one of those states. So you might want to check, though, just go online to see if Texas has an income tax. I don't think it does, but double check that. If they do, then you might have to file a tax return there, just like the California. So all the states are going to be different. Some might have a threshold like California does. Others may not. Some states will follow treaties, treaty benefits, will give treaty benefits. It's all a hodgepodge, and you basically have to go to the state taxation agency to see what the rules are for that state. Next question. My only income is from my summer internship in San Francisco. Could I complete the GLACIER record? You'd only be eligible to complete a GLACIER record if you have a UCSD payment. We only need a GLACIER record if we're paying you. Other employers, they have to use their own software or not, or whatever, to figure out your withholding requirements. Let's see. Is that bank gift considered U.S. income? So this is going back to that bank gift. It's interest income. It is U.S. income. So resident aliens would have to pay taxes on it, but non-resident aliens, F1s, J1s, typically do not have to pay taxes on their interest income. You've not received the invitation for the 227 workshop on Form 8843. There's no invitation that goes out. You just have to go to our website, and it's down here. You click on that and you can register. Let's see, by the time I first set up my GLACIER, sorry. By the time I first set up my GLACIER record, I was still an NRA, but I became an RA not long after that. Do I need to update my GLACIER record and re-sign all the forms? You should be updating your GLACIER record every year, particularly if you want tax treaty benefits, because if you don't fill out the new forms for the new year, they will not apply your tax treaty benefits. So every November, I think, GLACIER should send you an automated email requesting that you update their records. Also, as non-immigrants, if you, for instance, extend your DS 2019, your J1 status, then you should, at that point, update your GLACIER record, because that's going to have implications for payment uh, for tax withholding. Because basically, if you're extending, GLACIER is going to recalculate everything based on that new period that's going to be present in the United States. So if you're, for example, from a country that has a retroactive treaty clause and you extend your DS 2019 and suddenly you're past the 2-year limit, then GLACIER is going to stop allowing you to take any tax treaty benefits, et cetera. So yes, you should update your GLACIER record every year, or if you extend your non-immigrant status, you should update your GLACIER record at that point. Next question. I'm a scholar. I have my spouse living with me on J2 status. Sorry, I'm reading. It's pretty long. Let's see. So I'll just say something about J2 spouses and J1 principals and residency status. So if the J1 principal is a resident alien for tax purposes, then the J2 spouse, even if they are non-resident alien, has the option to file as a resident alien. This is I would just recommend you go to publication 519, IRS publication 519, and there's a section on that for claiming a residency status for spouses. Okay, question, what's the difference between a 1040 and a W-4? The W-4 is the form that you provide to your employer that basically identifies the withholding allowances that you are requesting of your employer. The 1040 is the form that you complete and send to the Internal Revenue Service, our federal government, to pay your taxes or request a refund. Okay, let's see. There are a couple really complicated questions here that I just don't have time for. So I'm going to recommend, if you don't get your questions answered, please submit questions to International Tax Help at ucsd.edu right up here, because some of these are just, it's going to take a real long time to answer. Okay, next question. I got married in August last year, but I'm not getting appropriate tax withholding according to that. I'm taxed more, in other words. How can I change that? I'm a J1 scholar. Okay, so this goes back to that whole concept of of residency status and the W-4 when you tell your employer how much you want withholding. If you're a non-resident alien, you do not get tax benefits like resident aliens do. You don't get an allowance for a spouse. So it doesn't matter if you got married. If you're still a non-resident alien, you don't get any benefit from that marriage. When you become a resident alien for tax purposes, that's when you can get a benefit. Then you can claim an additional allowance and have less withholding from your paycheck. Okay, next question. I'm a PhD student with first-year departmental PhD fellowship. Does that mean I'm an employee of UC? So you're getting a fellowship, but it's not wages or salary. So it's being disbursements is paying your payment. And I don't work in the UC path. I don't know if you would be considered an employee or not. You're definitely getting a payment, so you have to have a GLACIER record with disbursements, and they need to be withholding income from your fellowship, unless you have a tax treaty benefit. So I hope that helps explain or answer your question. Okay, next question. J1 visiting scholar not employed by UC San Diego. No employment in home country. Funding is a scholarship. Tax-free in home country. Do I need to file taxes? So just one thing to know about scholarships, fellowships, they are generally taxable unless it's being paid unless you're using it to pay your tuition or fees. But scholarships, fellowships that pay room and board, living expenses, things like that, that is fully taxable unless, of course, other things apply, such as a tax treaty benefit exempts you, or if you're a non-resident alien and it's external funding outside the US, then you wouldn't be taxed on it. Okay, next question. I only worked in Seattle during the summer. Am I correct in understanding that I not need to file a California state tax? So if you had no income in basically you would have to look at that. If you remember back to the PowerPoint slide, that threshold of income, worldwide income, you would need to look at that to determine if you have to file taxes. But basically, you're not going to owe anything if you had no income while you were inside California. You wouldn't have to pay any taxes. Of course, you might have to pay a state tax in Washington. Let's see. So uncertain about the home address you should provide on Form 1040-NR. You should, wherever your residence is. So if it's California, that would be your the address you should put on your federal tax return. What does it mean for implications for California? Again, you need to identify whether you need to file based on your overall threshold. But even if you do end up having to file, you're not going to pay any tax because California would only tax you on the income you earned while living in or working in the state of California. Okay, next question. I arrived in the USA for the first time on December 30th, and my employment at UC started from January 1st. You do need to fill out a Form 8843 for tax year 2023 because you were present for 2 days. Yes. I passed the deadline for getting W-2 electronically. Is there a way to get it now? I'm a J1 scholar. I am not sure about that. I would go on to your UC Path record and see what they say about that. Next question. I am an NRA. Is it compulsory to fill via GLACIER, or can we use services like AO Tax? You certainly don't have to use GLACIER Tax Prep, but I would strongly encourage you to make sure that whatever tax software you use understands what non-residents are and how to work with non-resident aliens for tax purposes. Let's see. Next question. I'm a UCSD grad student, did an internship at a startup previous summer. The startup has refused to give a W-2. Can I get a refund without a W-2? So I guess my question is, what did they provide you? What kind of documentation did the startup provide you with that shows the income that they gave you? If they didn't give you a W-2, did they give you a 1099 miss? Were you employed as an independent contractor rather than an employee? So if you're employed as an independent contractor, they wouldn't give you a W-2, they'd give you a 1099 miss. But that, again, does show the income that they paid you, and they would also send that to the IRS. So they should have given you some kind of form, and that form you would use to complete your tax return. Next question. So if the IRA, sorry, I don't understand this question. So if the IRA to RA is retroactive, how do I file if I got 1042 forms? Those are for IRA. 1042S forms is just for tax treaty benefits. So you can be a resident alien and still be claiming tax treaty benefits, and that income that was exempted from tax would be reported on the 1042S. Okay, next question. If I had paid internship over the summer, will GTP reflect that? GTP, so if you have a Glacier record and you move to GTP, you access GTP through your Glacier record, excuse me, GTP will populate all the information that it has in its system. But if you worked for another employer, that employer's data information is not going to get into GTP. So you're going to have to key that information in as well. So if UCSD gave you a W-2, that information will be keyed in already, will be automatically populated. But you would probably need to add a W-2 form in for another employer and then key in all the important data from the W-2 form that you got from that other employer. Okay, next question. Is filing my federal tax just filling out two forms if I'm a non-resident alien with income? Or is that one step of five? So if you're an NRA, if you use GTP, GTP will spit out all of the forms 8843 and the 1040 NR and any additional supplements that you need. So GTP will cover it all. Next question. I began my postdoc in December 11th, and Jay, will I receive the tax return after 2 years from that date? I don't quite understand what you mean by will I receive the tax return. Basically, if you began your postdoc position on December 11th in J1 status, you probably did not get paid until January for the amount of work you did in December. And our tax year only pertains to income that you were paid between January 1st and December 31st. So all of you who may have started employment in December, if you didn't get your first paycheck till January, I think they sent it out January 3rd of this year, then lucky you don't actually have to file a 1040 NR because you had no income, even though you started working in December. So you don't have to file a 1040 NR until next year. Okay. My immediate dependent family members are living in home country. Am I eligible to get benefit in tax filing? No, you would not be. Well, it depends. If you're a resident alien, then perhaps, but if you're a non-resident alien, you don't get benefits for family members. Next question. If I was not in the US until 2024, I should not fill any form until next year. Correct. You don't have to fill out any form, but you've gotten a good introduction to what you need to do next year. Next question. Is there any workshop session to help guiding, walking through on how to fill in the Glacier? I'm assuming this is Glacier record. Glacier tax prep, the federal workshop that we have in March is actually going to help you understand how to complete your Glacier tax prep record. But for filling out Glacier, no. If you have questions, you can reach out to glacier@ucsd.edu and they will answer your questions. They are quite a bit busy right now, however, so it might be a bit of time before they can respond. Let's see, I didn't fully understand which California forms I have to fill out, only the federal ones. Yes, I did gloss over the California forms quite quickly. I really, really recommend that you come to the California State Tax Workshop to understand more the requirements and obligations for completing your California forms. But generally, they have both a non-resident form and a resident form. It's basically the 540 NR for non-resident or the 540 for residents. And of course, if you only came to California for part of the year, then you would be a non-resident. Actually, you'd be considered a part-year resident, but you would be using the NR, non-resident form. Okay, next question. I'm a J visa, joined in February. May I choose to be an RA, or you cannot choose to be a resident alien. It's strictly dependent upon your substantial presence test. So Glacier will categorize you based on your residency status. You cannot choose. You can only choose if you're a spouse and your spouse happens to be a resident alien, then you may have that choice. Let's see, a question about J1 Scholar, married, came in August of 2023. Do I need to file the California state tax? You would need to file the California state tax if your income is over the threshold amount that I identified in the presentation. So if your income is over that amount, you do have to file the California state tax. And that is worldwide income. So you have to include all the income you made prior to coming to California. However, do understand that California will apportion the tax accordingly. In other words, if you were in India for 8 months of the year and California for the last 4 months, and you have to file tax, they're going to ask, well, how much did you make those 8 months that you were out of California, and how much did you make the 4 months that you were in California? And ultimately, they're only going to tax you on the income that you made while working in California. Let's see, can I use Form 1042-S to file as a resident alien? Well, you file as a resident alien if that is your residency status. And if you happen to get a 1042-S, then you would use that in your filing, because that is showing the treaty exempt income that you made. So basically, for those of us resident aliens who have US-based income, we will file 1040 and DE4. If you're a resident alien and you have US source income, you will file the 1040. The DE4 is not something you file with the federal government, with IRS. No, the DE4 is the form you give to your employer in which you identify personal allowances from state tax withholding. So that's the state tax withholding form. But in purposes of filing your federal tax return, you would only file the 1040. Okay, I think I've reached the end of the questions. So again, if you have more questions, you can reach out to internationaltaxhelp@ucsd.edu. And thank you all for your attendance.